of AM Best rated companies in sub-Saharan Africa have revealed that under the updated Best Credit Rating methodology and building blocks approach, companies are very well capitalised. I'm Yvette Essen for AM Best TV, and Rishwinder Grewal, financial analyst for AM Best, is here to talk about a new report we've published on the sub-Saharan region. Can we talk about the strength of companies? The balance sheet strength has come across as strong for every company we rate in the region, and in some instances, very strong. Why is this?
So, while it is true that on a risk-adjusted capitalization basis, we see that all companies that we rate are at the strongest level, one of the things that we do is actually look at companies across the whole spectrum of the balance sheet strength. So we need to assess other areas as well. And some of the key features that we see in this market that bring the balance sheet strength assessment to very strong is firstly on the quality of assets, where what we see is there's a limitation as to the type of assets that can be invested in, especially as most of these companies are chasing inflation-proofed returns. Secondly, on the reinsurance side, what we see is the increased level of compulsory cessations within these markets. So what this means is that many companies are ceding business to a reinsurance company that is not rated by a global credit rating agency. So what this does is this increases the credit risk on their reinsurance panel. And finally, on the reserving side, what we see is a lack of good quality data within these marketplaces. So companies are using more simplistic reserving techniques to calculate their reserves. In addition to this, what they also do is have an increased reliance on external actuaries. So while this is not necessarily a negative factor, companies need to be able to challenge the external reserving actuary and be able to fully understand the reserves that they are booking.
Can we talk about the economic environment in the sub-Saharan African region? How is that impacting the business profile of companies we rate?
So the economic environment is an important part of assessing a company's business profile. What we see is that in this region, for companies that are based in East Africa, we would expect premium volumes to grow consistently year on year, aided by fast-growing economies. So if we compare this to commodity exporting countries such as Nigeria, these countries have an increased reliance on commodities to fuel economic growth. So what this means is for companies based in these countries is that the premium volumes are more volatile, and the lines of businesses that they write will change as they enter and exit unprofitable markets in line with macroeconomic cycles.
According to the report, enterprise risk management is key here in this region, and a number of companies have a weak or marginal ERM practice. Can you explain to me a little bit about what we think about ERM in the region?
So from AM Best's perspective, a key tenet of the ERM assessment is the fact that the risk profile of a company must be aligned with the capabilities of the insurance company. So what we see in this region is that while companies might have good risk management process, much of it is very much on a silo basis. So many companies do not look at their risks on an enterprise level. So as we move forward within these markets and as these markets grow and develop, what we will need to see is that companies effectively managing their risk at an enterprise level to face those challenges that they see lying ahead.
Finally, one of the things the report says is that this is actually a period of relative tranquility for the market. How is that period of relative tranquility being reflected in our ratings?
So one of the things that we have seen over the past few years in this region is that many companies have not had any significant changes to their rating. Now, within this region, what we see is that there are many opportunities for companies from outside the market to come in and tap opportunities. But what has happened is that there has been an increased level of protectionism within these markets. So what that has meant is that these opportunities have become more limited in scope. Now, what we have then seen is that the local insurance companies within these markets have then entered into a level of tranquility, as they are not challenged in the same way as companies from other markets might be. And so what we then see is that we do not see any significant changes coming through in their ratings.
AM Best report looking at rating trends within the sub-Saharan African region can be found on ambest.com. For AM Best TV, I'm Yvette Essen.